It doesn't get bigger than this when you have India's biggest banker on ET now to talk about economy, the credit cycle, interest rates, the future of SBI, and what should shareholders expect from SBI. Just to put a context here, SBI has been firing full cylinders. That is how things have been. The line which we've been using to describe SBI from last couple of quarters under Mr. Khara's tenure has been, who says elephants cannot dance? But the word which we got from him, that forget dance, it's time for tango and salsa. So is SBI getting ready for the new move? Let's discuss all that and much more with the man himself, Mr. Dinesh Khara. Mr. Khara, always a pleasure to have you in ET now. Thank you for joining us.
Thank you very much, Nikunj. Pleasure for me also.
Should we pick it up from where we left last time, that SBI was getting ready for a new dance number, tango salsa?
No, this is our effort and endeavor, the way the economy is prospering. We want to be very much part of this growing economy, prospering economy, and we want to ensure that there should not be any lever which we should not use to support the growth of this economy.
Mr. Khara, you've been calling the credit cycle right. You've been saying that, look, the double-digit growth is real, the double-digit growth is here to stay. When we spoke to you last time, there was a inflationary concern, there was volatility in the bond market, and the base effect had kicked in. But that is a conversation we had a quarter ago. How are things shaping up for this quarter?
I think as far as this quarter is concerned, inflation, of course, we have seen that for 2 months there was an inflation which was outside the tolerance level of Reserve Bank of India. But I would say that it was not a trend, it was more of a one-off, essentially attributed to the vegetable prices, etc. And I expect that the rains, if at all we look at it, 36 states and union territories, out of that about 25 states and union territories have received the normal rainfall. So this is eventually going to get reflected in the inflationary trend, and my expectation is that it should come back to within the RBI's tolerance limits, and that is something which should go well in terms of the interest rate trajectory. So my sense is that interest rate, we should have more or less, it should be at a pause situation as far as the RBI policies are concerned. So that is, to that extent, it's a very encouraging sign from the economic activity point of view. And we have seen that, as far as the banking system is concerned, the growth in the credit from the banking system has been somewhere in the range of about 12 to 14%. And last year we had seen the situation where the deposit growth was trailing far behind. But this year we are seeing that the deposit growth have also picked up. Well, of course, the cost of deposit has also gone up, and the CASA for the system has also come down. These are the situations normally seen in the inflationary conditions. Normally people have got a tendency to shift their deposits from savings into the term deposits. But I think overall, if at all, the interest rate situation remains stable, it will certainly help the investors and also the corporates to really plan out their investments. We have seen that as on March of 23, the capacity utilization has moved up to 76%. So we have already started seeing the traction in terms of the corporates taking decision for fresh investments. Some of the sectors have actually hit the full capacity situation too. Considering the fact that the economy has infrastructure as one of the core sector where the growth is happening, then batteries, EVs, renewables, these are the sectors which are actually new levers of growth. We had not seen these sectors in the past. So I think the conventional sectors plus the new sectors for growth actually paints an excellent picture for the growth of this economy. And that is something which gives us a confidence that though this year we are expected to have a growth of about 6.8, but going forward in the foreseeable future we should be growing more than 7%. That's what my assessment is based upon what I read from the various factors which influences the economy.
So, Mr. Khara, on a sub 7% base of GDP, you're talking about a 12 to 14% credit growth. If you are of the view that next year it will be 7 plus, which means can I safely assume that the credit growth trajectory for SBI is only going to be improving?
I expect that to happen because for the as of now our credit deposit ratio even at a global level is also somewhere around 72%. If we look at only the domestic, we are at 65%. We have enough buffer available with us to support the growth requirement of the economy, and we are only ensuring that we pick up the assets which meets our risk appetite, and that is something which our major focus is. So I think we have the required ability to support this kind of a growth, and my normal expectation is that we should be growing somewhere in the range of 12 to 14%.
Was the 12 to 14% you guided for? I'm again being very careful with words here. When your assumption for GDP growth is sub 7, next year assumption, according to Mr. Khara, is going to be sub 7 plus. So 12 to 14 should become 14 to 16 then. I'm trying to get maybe a headline from you.
No, I'm only trying to say that maybe if at all it is 6.8, it would be around 12. But if it is at 7% plus, it would be at 14.
Okay.
So the range remains the same.
And SBI has historically beaten the market. So then if I add that as a factor, then 14 should also be beaten.
Let us wait and watch.
We've seen a war of liabilities. Something where you always said, look, the smaller banks are suffering, but for SBI, because of the SLR and the other tools we have, the impact would be minimum. Now that the war in liability, according to you, is settling down, what happens to SBI?
Well, as far as the liabilities are concerned, apart from the war, we also look at it from the point of view that liability is more of a franchise. So we have got large customer base, and we must ensure that their interest is protected. So with that in mind, we have been tweaking the interest rates here and there in some of the buckets, more so in the fixed deposit, and to ensure that we should be in a position to cater to such investor depositors base through offering a inflation adjusted returns also. So I think having said that, we are having a very clear focus in terms of improving our CASA one and improving the CA component of the CASA. Traditionally we used to depend upon the government deposits, but of late you would have observed that the government is also moving towards the just-in-time funding of the accounts, and that is one of the reasons why we have started, actually for about 6 months plus now, we had recalibrated our strategy, and we started looking at the trade commerce industry and the transaction solutions in a very big way, and we have already started seeing the positive results of that, and that gives us a hope that maybe the CA component of the CASA will improve.
One pain point, Mr. Khara, for SBI has been the agri loans, still in double digit. This year, monsoon, good and bad, we can argue depending on the time structure you're looking at. But there is stress in the agrarian economy. Rural economy is not picking up. So your plan to bring the agrarian loans to double digit, from double digit to single digit, what happens there?
Yeah, our plan for bringing the NPA level in the agricultural loan to single digit, it still stays. And actually, we used to have NPAs as high as almost about 13% in agricultural loans, which have been already brought down to sub 10. So that is something which is nothing but our efforts on the ground to ensure that we stay connected with the borrowers, and it helps us in ensuring timely review, renewal, and collections also. We had come out with a operational support subsidiary about 6 months back, and that is actually proving to be very useful in this direction. So I would say that yes, there is. I would also mention that the stress which you are mentioning, it may not be a reality on ground, because how it will really pan out, we'll have to probably wait and watch for another month or so to really figure out how the rural economy will look like. But the way things stands today, I'm a bit hopeful that we should be in a position to bring down our NPAs in the rural sector or maybe agricultural sector from the current levels of about 9.5, 10 to somewhere around 7%. That is our internal target, And hopefully, the way we are operating, we feel confident that we should be in a position to achieve this. Apart from that, we are also trying to change the complexion of our rural book. We were having low value KCC loans, which are actually comprising about 40% of our book. We are now looking at agriculture investment credit. We have got encouraged by the Agriculture Infrastructure Fund, which was 1 trillion of fund announced by the Government of India, and we are looking at such opportunities to support the rural economy. We have already created 47 centralized processing centers to deal with high value agriculture investment credit. So I'm quite confident that we will have good opportunities of underwriting good credit risk in the rural economy too, and that eventually will show up in our overall quality of the rural book.
Mr. Khara, but looking at the big picture, you've said that this is a multi-year credit cycle. We are 2 years already into a strong expansionary cycle. Can I say, as of now, if one has to take a view, you see this credit cycle for SBI and for the banking sector per se, because whatever you ultimately will say, sir, is a representation of the sector. Do you think there is visibility for at least 3 to 4 years of double-digit growth?
See, I tell you, when it comes to the retail I feel has got a good potential to grow. And why I'm saying that is because when it comes to the services sector, that has done very well. And I get to have a visibility of an excellent service sector going forward also. The reason behind is, if you will look around, you will see that there is a new levers which have come in. The data center, the AI based analytics, and all this is supporting the global economies. So I think these are the newer sectors which will create quality employment in the IT sector, and with that quality employment, the aspirations on the part of the individuals will go up, and we have seen that it actually fuels the demand. With the demand getting fueled, the demand for the white goods getting fueled, all other sectors are connected to that. So that gives me the confidence that yes, we will be in a position to see these kind of things happening. The other very important area is, thanks to the infrastructure development, road sector, logistics are becoming very, very important sector for the economy. And there's a conscious effort to reduce the cost of logistics from about 12% to about 6 to 7%. So which also means that warehouses, data centers, apart from what I mentioned in terms of the renewable economy, the solar panels, solar cells, now the demand for hydrogen, development for hydrogen. So these are the newer sectors of the growth and development, and that is something which gives the confidence that as compared to past, where we have been in a position to see the cycles of growth in 5 years term, these new sectors give me the hope that maybe this is going to be much longer term as far as the growth cycles are concerned for Indian economy. And the kind of focus which the Government of India and the state governments have in terms of development is quite remarkable.
How much of your current corporate book is coming from new businesses which 3 years ago perhaps were zero or minuscule?
These are the early days,
okay.
But yes, of course, we have started seeing, for instance, the data centers. We have started seeing the proposals coming in. So it's a very recent development, but we are funded also.
This move needle for you on your book. These 3-4 businesses which you mentioned, when will they start moving the needle for you?
I think maybe another year or so.
Okay, that's
we have already started. We have supported the renewable sector in terms of the solar panels, and also we are supporting the rooftop solar, and all such initiatives we are supporting, and we are seeing good traction on demand across the economy. Maybe SMEs are also putting up rooftop solar. We are actually supporting solar pumps in the farm sector. So I think the way we consume energy, the sources of the energy are going to change in a dramatic way in the days to come.
I'm again going back to the big picture, sir, you've sketched for us. Your big picture assumes capacity utilization uptick and uptick which will come from retail growth. But when new sectors, they will kick in and now they will move the needle for you in FY25. Then for next 2 or 3 years, we are looking at rather explosive numbers from SBI. You may want to play it down, but you're putting the pieces together for me to interfere.
No, actually what I mentioned about retail and then I mentioned about the various new levers of growth in economy. In that context, the others which will actually start showing up would be the SME, the ecosystem, because they will also grow. So we are internally, as I mentioned, that we are very mindful in terms of the quality. It is not merely the number, but the quality of the number which matters for us.
Fantastic. So no NPA problems?
We want to avoid any such NPA problem, and that is the reason why we have strengthened our underwriting practices.
I'll say touch wood again. Let's look at the recent move from Reserve Bank of India in terms of systematic withdrawal for the ICRR. Liquidity comes back into the system for SBI, could be 20 to 25,000 crore. What happens when the money comes back?
Also, this is a point of time when the busy season will also kick in. So that is a point of time when the credit growth is normally higher than the usual. And we expect that the RBI decision could have been one of the factors which would have influenced the decision, would be the busy season requirements also. So I think we should be in position to deploy that effectively.
Mr. Khara, the bad bank as an idea is not moving anywhere. No recoveries are happening there.
No, actually, this is an initiative which normally takes some little more time. Outcome, as far as visibility of outcome, it might take some time, but it's a bit of a process which it really goes through. So I think in terms of processes, after the entity came into existence, they have already put in place the structures, and also the accounts have started getting transferred, because it involves whole system, and in the whole system for transferring account, people have to obtain requisite approvals, etc., etc. And also for the entity also, before the court, they have to do the due diligence, they have to arrive at a price, and based upon that price they have to convey to the lenders. Lenders in turn have to go to their decision making bodies. So this is something which actually consumes a lot of time. So I would say that the way processes have got stabilized and the way things have started moving in the right direction. As of now, perhaps it would not have been in order to evaluate in terms of the outcome, but yes, of course, maybe a year down the line, we should be in a position to get to see much better outcomes too.
Mr. Khara, one of the big hallmarks of your tenure has been the way you managed to take ROA from less than 1 to 1, and now it's almost like a permanent number. When we spoke to you last time, you said that you were aiming to maintain ROA at 1%. Now that number is well established.
Now we are trying to maintain at 1.20.
Okay, is that the new guidance?
As of now, yes.
Okay. Can you better on that? Because you're cutting costs everywhere.
I'll make an effort in that direction, but will not be in a position to give any color on that as of now.
So what will make you happy? Last time you told me that if you're able to sustain 1%, you'll be happy. Now you're aiming at 1.2. So what's the next target which will make you happy?
I think 1.2 and a ROE of, we are at about 24% ROE, which is actually perhaps the highest in the industry. And our effort is that we should, earlier we were aiming at 15, but from 15 we have moved to this number. Our effort would be that we should stay above 20% ROE and ROA of 1.20% plus. How much plus? I think the time will tell.
Okay. I just want to bring it to our viewers that what Mr. Khara talked about in terms of ROA and ROE. I mean, it is one of the most fantastic numbers in terms of ROE in the industry. Most of the private banking peers, they have ROEs which are just north of 20, and now State Bank of India is above 20 and is aiming to stay above 20. That's a fantastic change which somehow markets don't talk about it. Markets always talk about NIMs, right? Why NIMs have fallen in between quarters. When will they improve?
Well, as far as NIMs are concerned, we were at 3.47 as far as the domestic NIMs are concerned in the last quarter. I would say that interest rate, more or less they are stable. So I would expect that we should be, it would be range bound, but yes, of course, because NIMs at times have got some one-offs also. So I expect that our effort would be that we should stay at least 3.40% plus.
But can you improve on it now that cost of liability is getting better?
I think maybe we will wait and watch, because see, the point is that when it comes to focus on quality, at times we have to sacrifice in terms of interest rates. So that is one of the reasons why I would not mind sacrificing NIM by 2 or 3 basis points, but I don't want any kind of impairment in quality of my assets. So eventually, if you will look at it, if at all I can keep my credit costs below 0.50 and keep my NIM around this, though my credit cost was 0.32 last quarter. Our effort will be to stay around that, but still the tolerance level is not to cross 0.5. That is what our effort will be. And NIMs also, with once we start seeing good quality assets also, maybe we'll try to improve those NIMs as well. So we are evaluating our portfolio very, very carefully on an ongoing basis, and where we are certain in terms of quality, we are ensuring that we should price that asset at after considering the risk which is inherent in that. So bit of a conscious effort on the part of the bank to ensure that we should do excellent job.
But you don't think that the loan repricing is a challenge in the industry, because some of your peers are pointing it out that PSU banks are mispricing the loan risk?
But State Bank of India.
You don't see there is a problem whatsoever? Even for smaller banks?
No, of course, after all we are operating in the, but my answer about State Bank of India was only for the mispricing. So I just wanted to, I want to clarify. Yeah, of course, it's a function of the market, and we have to be cognizant, but at the same time, we also decide below what we should not go.
Sir, I've just extended my appointment with you, so a couple of last follow-up questions. You've gone on record and you've said that the quarterly fee-based number is 100 crores now. What should we expect going forward? Because it's become an ecosystem now. Not an ecosystem, but it's a universe now.
Well, yeah, of course, has been one of the major lever of growth for us. Last year we had underwritten more than 1 trillion worth of assets with the help of and the revenue generation through was almost to the extent of about 4,000 crores. So what we are now working on is, we had created various subcomponents, in the sense that we came out with retail, corporate, rural, global. So now we are integrating all of them onto one platform. That is one. Secondly, we are also integrating the CRM and the analytics layer into it. So our ultimate goal is to come out with a digibank within the bank. And the first step which we have taken is for every Indian. Earlier the used to be only for ETBs. Now our effort is that we should offer it to the new NTBs also. And with that in mind, for every Indian is something which is attempted. 1st of July we had launched, and it offers the facility of funds transfer leveraging the UPI layer by those who don't have even account with us. And also it offers cash withdrawal through the interoperable UPI mechanism. So that is also something which we have started offering through going forward, actually what we are observing currently is almost about 63% of our savings bank account which we are opening through
63%?
63%, and almost about, the number varies any day between 40,000 to 50,000 accounts we are opening through
If I look at your tenure, current tenure, these are the headlines which you've got. SBI profit record high, SBI NIMs record high, customer addition record high, market cap record high. What is that next headline which will make you happy and excited? Ye to sab ho gaya.
No, I think we as an institution, we have got a very rich heritage of 217 years, and we would like to see this institution getting built year after year, and it should remain relevant for its constituents for many more 200 years. That is what my ambition and aim is.
So tango, salsa, bhangra bhi add kar dete. SBI is getting ready for all three.
Thank you.
Thank you very much.